And we're off and rolling. Welcome everybody to Authentic Growth Webinar Series. I'm your host, Jennifer Zick. Thrilled to be joined by three great panelists today who I will introduce shortly. But first, as we're waiting for attendees to roll in, I'm watching the count as people are logging into the meeting. I just want to take a little bit of time to introduce you, if you're a first-time guest to this webinar series, to who Authentic Brand is as host and what it is that this series is all about. Authentic Brand is a community of fractional CMOs, chief marketing officers. We work with growing businesses to help them overcome random acts of marketing and confidently take the next right step toward healthy growth. And so in our series, Authentic Growth, our goal is really to serve growing businesses, their leaders, their executives, owners, executive leadership team, and their revenue builders, sales and marketers, with topics that are timely and actionable. Today's topic, the relationship between finance and marketing, is going to be really fun. I promise that it's going to give you a lot to take back to the office, especially if you, like us, are in the middle of your budgeting season and planning for next year. We hope to give you some conversational points that are going to help you move forward with clarity and alignment. We really appreciate having you here with us today. We are recording this session, so we will be following up with it in your inbox after the fact. While we are moving through the conversation with our panelists today, I would invite you and encourage you to use the Q&A feature. You'll see at the bottom of the screen or wherever your controls are, a chat feature and a Q&A feature. You're certainly welcome to drop a chat message if you want to just make a comment. But if you have a question that you'd like us to consider teeing up to the panelists at the end of the conversation, please put it in the Q&A. Both I and our moderator will be keeping tabs on the Q&A to make sure we do as much as we can to address your questions. So thanks again for joining us. So without any further ado, I'm just delighted to introduce you to our panelists. Today, the panel is made up of representatives from Authentic Brand and also from our friends at AVL Growth Partners. I'm going to start by asking JP to say hello and introduce himself, and then we'll go to Chris and Peter and then jump right in. So good morning, JP.
Good morning. Thank you, Jennifer. I'm JP Tremblay. I am a fractional CFO with AVL Growth Partners, where I work with a number of companies. I'm mostly focusing on our tech practice. So most of the clients that I work with are SaaS business models, so help them through that stage of growth. So I'll probably refer to that business model today in our discussion. Prior to that, I've sat on different sides of finance. I've been on the investor side as well, which hopefully provides some context. And I've also spent a stint as a teaching professor, which is always fun to talk to people. But why is this topic today so exciting and so important to me is because I feel like it's the description of my marriage. I happen to be married to a CMO. So for us, this whole thing is basically pillow talk. So hopefully today it'll be a little bit of couples therapy for me, and I'll probably learn some tricks on how to bridge those discussions. But it is a fascinating topic, all kidding aside, that we are tackling today. But hopefully we can find those commonalities and bring everybody together around the table. So I welcome the discussion. Thank you, Jennifer.
Thanks, JP. I might need to invite your spouse to our next webinar.
She might be watching. Sorry, honey.
Awesome. Thanks. And Chris, welcome.
Thank you. So I'm the founder of AVL. We've been around about 15 years. And so a lot of times I use the word CFO firm. There's a lot of distinguished from the CPA firm. So we're a team of about 75 people or so, been around a long time, worked with 1,000+ companies over the years. And, we have accountants, controllers, and CFOs on our team. And we really work a lot with what we call high trajectory enterprises, high trajectory ventures. A lot of our client companies are venture backed or investor backed. And we really just like to find ourselves in very dynamic environments and where things are changing a lot. So for us, the conversation, and I think marketing is a great one, whereas there's such a wide span of stuff happening in marketing all the time, and the things that we learn in one quarter are obsolete, very soon, or we're always learning. And so that learning curve is so steep, and that's where I think this partnership makes a lot of, it's very important for those early stage companies. And for me, I love it just because in some ways I was a trained accountant, but in a lot of ways I'm an entrepreneur, and like I love the go to market stuff, probably more than I love accounting. So I'm kind of like a, uh, you know, closeted marketer in a lot of ways. And now as the founder, I get to do a lot more than I do the accounting. So it's super fun for me.
Thank you, Chris. We're glad to have you here, and it'll be fun to talk about how so many founders see themselves as marketers and how we partner with them to get those ideas into action. So Peter, over to the marketing side of the house. Hello.
Hello there. Thanks for including me today. And yeah, I'm Peter Zaballos, and I'm a fractional CMO with Authentic Brand. And I've been working at Authentic Brand for a little over a year now. But prior to that, I was the CMO of a unicorn technology company, Cumulo, in Seattle, that made a software-based file storage platform and had about $250 million invested in it. So lots of expectations were high there. And then prior to that, I was a CMO at SPS Commerce, which is a public company in Minneapolis. I was there for 6 years and built the marketing organization pretty much from scratch. They make a cloud-based supply chain platform for retailers. And prior to that, I spent 7 years helping to run a venture capital firm and then a bunch of other high growth tech startups in marketing roles. So I have, along the way, I have learned just how important it is as marketing's role has changed and the technology that goes along with it have changed. One of the most important relationships a CMO can have is with the CFO. And we're going to get into some really good discussion about why that's so important.
Absolutely. All right. Well, let's get the discussion rolling. And once again, I just want to invite our audience to participate by putting some questions into the Q&A as we move along. And we'll be sure to keep an eye on that and create some time at the end to address some audience questions. But I'm going to get the ball rolling with a question, and I'd like to direct it first at you, Chris. Let's start with some of the pain points. We're going to get to a good resolution by the end of this meeting, I know, but let's start with some truth. What are some of the biggest frustrations that finance leaders have with marketing? Where have you seen the most friction or lack of alignment in that relationship?
Yeah, I think that for me, I think the thing that's most common that I see across the companies that we've worked with, I think is, and it's funny to talk to Peter about, this when we had a pre-call, because he's so data driven and it's just so like juicy to hear. So, but there's so often that we run into the, everything is necessary. There's a lot of necessary, like we got to be there. Like that's like, why are we doing this? We have to be there. We have to do this. We have to do this. And it's like, there's a little bit of a pay to play mentality in a lot of cases. And it's so hard to kind of pull that apart. The other one for me that I think we love to do as CFOs is we love to run experiments. Like, how do we know this is working? Like, how do we run experiments to check on pricing, to check on channel, to check on various things? And it doesn't mean I'm not trying to indicate that let's do random acts of stuff, but it's how do we purposely, test certain things? And combined with that is like resource allocation. So, there's cruise control where we're like, hey, we're doing this, and in accounting we call that Sally. It's same as last year. We're same as last year with very little resource reallocation. And what we really like to look at is how are we proving our allocations are really done in a right way, and that we're pushing capital and pushing the envelope on how we're distributing capital. So, and then I think it's like the last one I would just say is like, people that give up on attribution too early and just saying, what is this really driving? And it's like, I can't, it's too hard. You can't point it. There's not a direct line, and it's like, hey, I get that. We respect that, but there is like an 80-20 or there's something in there that we've got to start to draw something. And I think I think this is where the CFO their experience can lean in to say, how do we get there? What are the things that we can do? And I think that's where the relationship can bloom a lot more when we dig in there with the CMOs in terms of like, how do we create this attribution line, whether it's pure or whether it's a little cloudy, but we kind of make these agreements on what happens. But that's kind of where I think the 4 things that I see are just like the most common things I revolve around.
That's a really thorough and thoughtful answer, Chris, and it is making me reflect a little on all the conversations I had with my finance leaders about B2B professional services not being a straight line, which is both true, but also not an excuse, right? So, Peter, I'd like to flip that same coin over to you and ask, what do you think marketers find the most frustrating in their relationship with finance leaders? And I have a secondary part to this question, because you and I know in working with the small businesses we work with, almost all of them have on their leadership team a finance leader and an ops leader and a sales leader. But a lot of growing businesses haven't put a marketing leadership role on their leadership team yet. So how does that impact the dynamic between finance and marketing?
Well, I'll sort of build off of what Chris was saying. I think in the last 15 years, and for sure in the last 10, marketing has become a discipline that is 100% data-driven. Like there isn't a single thing you should be doing in marketing where you don't know how to measure the outcome and you don't know how to measure the performance. And the flip side of that is if you are doing something where you can't measure that, contain it, examine it, and scrutinize it so that you can figure out what was the benefit of that. But otherwise, this is marketing is a 100% data wonks dream. Everything can be measured now, and it should be measured. So the biggest frustration I have had early in my marketing journey was with finance organizations that didn't take the time to understand what we were actually doing. Like I have lost count of the number of very productive conversations I've had with people in other parts of the organization about how search marketing works. Like search marketing is the bedrock of everything we do now. It's super technical. I used to use an analogy. I wrote a blog post about this a few years ago. Marketing is a lot like building a software product. You can't build a software product overnight. It takes months of development. You need a system architecture for marketing. You need like a brand framework and a go-to-market plan, but it takes months to get results to consistently perform from a marketing campaign in the same way it takes months to build a product. But a lot of people that populate other parts of the company don't necessarily understand that, and they look at marketing as just a transactional department. And with finance, it can be, here's your budget. I know that you want more, but you can't have it. But if you reduce that relationship down to transactions, everybody's going to lose. And the marketing organization is not going to be able to live up to its potential. And then to your second point, Jennifer, it's related to this. If you've got a head of sales responsible for marketing, they may understand how Salesforce works, but they don't understand how a marketing CRM platform works and why it's important and why marketing operations is a critical part of the go-to-market motion. So because marketing has changed so much and gotten so technical in the last 10 to 15 years, I'd say the biggest issue, whether you've got a leader jointly responsible for marketing or a CFO, is not taking the time and not having the curiosity to understand how does marketing work today, and then how do you invest in it and understand the return on that investment.
Absolutely. Well, and I think one of the critical pieces of what you've both just described there in terms of marketing and the relationship not feeling transactional, but accountable, is that there has to actually be a relationship and there has to be communication. So JP, over to your corner, what have you seen that sets the tone for productive dialogue between marketing and finance leaders? And does that usually happen in the setting of a full management team meeting, or is that best done in one-on-ones? What have you seen work?
Appreciate the question. It's a good question. So I'll tell you maybe what does not set the tone for a good discussion is when somebody comes to the finance department to me and says, how much can I spend? I'm a marketing guy, how much can I spend? And it's probably the worst question to ask because the answer is both nothing and all you want, right? It just depends on the return on that investment, right? So I think it's really to be honest, kind of that realigning what is the objective here, right? So I'd like to approach things from what I would call an hourglass approach, where from a top-down perspective and a bottom-up. So from a top-down perspective is usually when you meet with the senior management, the CEO, and usually educated by board discussion that says, let's for example said, our goal is we think we can double revenue next year, right? So we looked at our TAM, SAM, SUM, all that stuff. You've done all the analysis and think we can get there. And that's kind of our North Star. And that's good. So you take that, you're like, okay, this is now my target from a financial standpoint, with of course associated metrics from a hopefully cost analysis. Then where the discussion becomes productive is when you involve with the marketing organization, people who actually do the work, and say, how do you support that? Which activities are required to, which activities and resources are required for us to get to that point? And is it possible at all, right? So for me, these two come together, and then from there, you're able to size up. I mean, is this the size of a bread box, or is it bigger than a bread box, right? So how much is our current budget enough, like BAU? Is it good enough to get us there, or do we have to consider a much higher investment in that revenue engine that I call, right, to get us to the goal? So I think for me, everybody has to be aligned, and somehow we can hopefully all agree that there is, as a company, there is a goal. We are usually achieving growth from a top line perspective, and hopefully generating some form of earnings. I'm an old school cash flow guy, so I certainly like to do that in a profitable fashion. And I think, well, not everybody is like Peter with those metrics, but oftentimes we have to spend a lot of time translating that into, okay, how do we measure these things? How do we measure how much needs to go in the funnel on top in order to get, sales, close one at the end, and get us to where we need to be. And I think those discussions, I think everybody around the table is bridging that gap, maybe, that we're discussing today. If everybody was like Peter, we wouldn't be here today, I believe. So.
Yeah. Thanks. I agree with that statement. And there were two things that you just described, JP, that I want to call out that I especially appreciate as a marketer. First, you talked about setting a North Star goal, a North Star growth goal. In our authentic growth methodology, that's actually at the very top of the frameworks that we work with to help clients build out their marketing plan, right? Because unless all of the departmental leaders and the company agree on what that North Star is, what are we aiming for? We can't even provide the inputs that are going to help us get there. The second thing that I love about what you explained is that then we ask the marketing organization, is it even possible? Right? Because I can't tell you how many times we've been in positions as marketers where the business leaders have set goals without asking for the inputs and just expect magic to happen. So I appreciate that you're acknowledging the give and take of how we get consensus as an organization. Anybody else have a thought on that particular topic?
I just think that it needs to be a function of a sincere appreciation of how do you develop this relationship.
Mm-hmm.
And what does this person need to get their job done, and how do you help? How do you understand that? You're not going to get them to understand marketing's job if you're not willing to understand finance's job.
Yeah, I was just thinking about the same thing, which was like, I think about enterprise value, and like the CFO is focused on enterprise value. And so understanding how to convey the why in the marketing, not just the what, but the why, is so powerful.
Absolutely. All right. Well, Peter, this one's coming back to you. You've been a marketing executive for a long time, and you've had a lot of conversations along the way about decisions on marketing budgets, ROI, and expectations, right? In terms of pace and what they can expect to see and when. How have you set the tone for budget negotiation and decision-making, and what tips would you offer to your marketing colleagues?
I would say it's the same playbook that you should be using as a marketing person with sales. Like, if you really want to understand how to be an effective partner to sales, you have got to know the salespeople, and you have to know the SDRs. You have to know the sales operations person and understand what their jobs are like, what they need. Same thing with finance. The very first person I tend to develop a relationship with in a new organization in finance is the accounts payable person. That tends to be the person in the organization that you are afraid of and you would never want to be on the bad side of. But they're also going to be the one that's going to make sure that whatever you're buying, whatever vendor you're working with is taken care of. Spending time with the CFO to talk or reference back to something we said earlier, any marketing organization is planning 3 and 4 quarters out, because the campaigns that start today won't start yielding predictable results for a couple of quarters. So you're already thinking in the time frame that the CFO is spending a lot of their time thinking. So getting to know the CFO and understanding the whole budgeting process, when it starts off, how it's done, who leads it, and if it's a decent sized organization, they have somebody in FP&A, financial planning and analysis. In both the last companies I was CMO at, I had a dedicated person in FP&A, and they reviewed my spending by quarter. We sat down every month, but we did a deep review every quarter. We did our planning out 2 years. And that's because I'm spending a lot of money. CMOs are spending as much money as CTOs now, and more money than heads of sales on technology. So you really have to invest the time to understand how is the CFO charting the financial plan for the company. How do you help support that on a day-to-day basis? How are you supporting the FP&A person whose job is to make sure that the budget lands where it is supposed to every quarter? And then accounts payable. And I can also tell you that at both Cumulo and SPS Commerce, I had a meeting every quarter with the CFO, and they would walk in and push a piece of paper across the table that had a list of every subscription my department had signed up for, and it grew every quarter. And every quarter they would just grill me on, do we need this? What is this? What is it used for? Because anybody can sign up for a $200 a month subscription in most organizations. So it's also understanding, like, if they don't understand how your marketing campaigns work and the technologies and tools you need to use to construct them and instrument them and measure them for performance, going back to the transactional nature, those conversations about subscription services get really ugly because they don't understand why you're spending the money. All they see is your subscription budget is growing. So I think it all comes down to, you have got to be committed to a sincere and trusted relationship with these people, and understand that you're operating on a planning horizon very consistent with the CFOs, and not you're being held accountable on a quarterly basis, but you got to be thinking about the long term with the CFO.
Absolutely. So CFO friends, do you have any kind of thoughts on what Peter was sharing there?
Yeah, an hour's worth. I think one of the things I can't remember the words you just used, Peter, but it was just, when you get grilled, I think a little bit is again, this may be more personal, but it's like, there's a little bit of like, the hammer finds the nail, right? In marketing. And so if you have a marketing team that has a specific expertise, I think the CFO is also saying, are you exploring all the things? How are you thinking about it? What's going on? Are we just hammering this with this, or solving it with this hammer because we don't know how to do anything else? Or this is the way we're doing it? And so it's a little bit scratching that itch for the CFO to say, how are we thinking about this? And I think that's an important thing. When we get back to the kind of your previous question, we get back to the relationship is, can the CFO almost explain the marketing strategy? Can they really, if you handed the microphone over, are you teaching them a little bit more of the whys? This is kind of my comment. And I think the final thing with my comment on the budget, which is, if the CFO is only looking at anything that begins with a dollar sign, that in terms of a budgeting conversation, it's not going to be effective, right? It's got to be what are the other operational activity metrics? What are all the, Peter, you were saying long term. I was actually thinking kind of short term too. Is like you got to have that short term horizon in terms of what are the activities that lead up to this budget, and then kind of the longer term horizon in terms of where we're going as a company. So I tend to look at, hey, what are you committing to from a non-financial perspective of this budget that leads to that financial outcome as well?
Mhm.
And I'd like to maybe supplement that, if I may, about going back to being aligning those objectives, right? So if you go into a budget discussion, not having been provided what you're trying to solve for, that's a kind of, again, a bad footing, a bad place to start that discussion, right? So as opposed to say, okay, this is what we're aiming to do, and this is how we're going to get there, and the resources again required to support those activities. And maybe on the CFO side, I believe what Chris was saying, which is very true, is if you know the subject matter, right? For me, in some of the smaller organizations that I work with, the marketing department may not have the quantitative expertise required to do the modeling, the quantitative analysis and the modeling of those metrics and KPIs that are so important in measuring efficiency of our marketing spend. So I end up rolling up my sleeves and building those models. So I understand, we speak the same language. We have a common language to say, okay, I do understand what our close rate is, and I do understand we're trying to minimize our client acquisition cost and all of this. So we are now sharing those the levers that allow us to influence what we're trying to solve for a company, right? So we're trying to get there. We're trying to maximize LTV to CAC ratio. We can throw all sorts of acronyms today, but in the end, there's a few things that we can drive as a leadership organization together to say, okay, in order to affect this, this is what we need to pull over here. And I think all of that together helps us make decisions and look at things in a critical way, not saying, okay, hey, this is a pretty high expense. We're going to Vegas for this massive conference, and we don't know the return on that spend. That's kind of again, maybe a less productive way to start the discussion, right? Versus.
Jennifer, can I add just one thing to this? I forgot to mention, marketing exists only to hit the revenue plan. And the other reason you need to have the CFO partnership is the CFO needs to know we're going to hit the revenue plan. And if you're at a public company, that's super important. And when I was at SPS Commerce, we introduced a whole new channel of demand through search marketing that closed super quickly and grew fast. They'd never done that before. So I spent a year with the CFO talking to her about, when do we model this into your forecast? And with the head of sales to say, if marketing says they can create this much demand, I will believe it and sign up for that number. But we're only here to hit the revenue forecast. And the CFO, that's one of their big jobs, is knowing, are we going to hit the revenue forecast?
Absolutely. Well, and the conversation about the data and speaking the same data language is a perfect tee up for my next question, which I'm going to send over to Chris as a starting point. So Chris, in my experience, finance leaders are most interested in facts and quantitative data. They want to understand the ROI on marketing spend. They want to know the timeline for expected outcomes. All of that's critical for this business modeling we're talking about. But what metrics and KPIs specifically do you think are most helpful for a CFO that demonstrates marketing's impact on growth?
Yeah, it's a very, it's a very tricky one, because I think the way that I tend to think about this a little bit more is in the specific metric, is to say, do you have metrics that cross different time horizons? In the way that I think about this is that, kind of a little bit alluding to what I was saying earlier, is like, even on a weekly basis or on a very short-term basis, there's some very strong activity metrics that are saying, what are we actually what are the actions, what's the production from marketing? What are we actually getting out the door? Whether, let's just call it even, content pieces, if it's a content marketing strategy, or like what's being produced. And so there's an activity level that kind of ladders up, right? And so how do we connect that to maybe, more of an outcome measure, and whether that, is leads or conversations, etc. So I think this is, to me, I like to connect this non-financial activity and kind of those kind of pieces to the financial piece a lot more. And so then I have a separate kind of view on the monthly, and then be able to really dive deeper with my CMOs on a quarterly basis to say, and really having a conversation about what did we learn, and drill down into a quarterly is like, what are we learning? And I think, Peter, right before this, you were talking about, it was a great example at SPS, because really what you're saying is, I want to run this experiment, give me a leash, let's define the leash, and let's reallocate capital. And to me as a CFO, I'd be like, yes, like we're going to try something, and I want to try this, and this is how I'm setting up the experiment. This is how I want to run it. And then the leash gets essentially longer because you're basically proving the thesis. And that to me is like, great. So what are we looking at in the short term? And then we can kind of like, okay, we're actually producing some activity in this experiment that helps us learn. We were working with one of our clients, where we came in there and said, what if we doubled price? What if we doubled your price? What would happen? They're like, we have no idea. And we doubled price, and their demand increased. And they're like, how'd you know to do that? We're like, we're running experiments. We don't even know what your curve is. And it's such a valuable product. And they're like, okay, you just paid for yourself for the year and the month, like that was nice. And so those are kinds of like, why aren't we trying this? We had a client that had 100 products on their website. We said, what if you only put 12 products on your website, rather than 100? What happens here? And they're like, well, we never thought about that. It's like, so just like, how can we run these experiments, reallocate capital? And that's what I like. To me, those experiments are almost more valuable in marketing than some of the KPIs that get us kind of in a little bit of a rut.
I want to speak into or springboard off of something that you said there, Chris, because I want to acknowledge that a lot of our listeners are small entrepreneurial growth businesses. At Authentic Brand, we work primarily with businesses between 5 and 100 million in annual revenue. So I expect some of them are on this meeting right now listening in. And many of these companies have been founder-led, perhaps sales-driven. If they're doing marketing at all, it's been what we would call random acts of marketing, very reactive, maybe not even with a marketing budget, but just like opportunistic. Okay, we'll throw some dollars in. And when you're starting from that position, and we're talking about data and insights and measurements, we've been writing recently a lot about data and analytics. And I want to acknowledge that for a company that's just starting the strategic marketing motor, you really do have to give yourself some grace to make some commitments, measure the level of activity and output, which will create the engagement data that eventually will lead to a baseline of history that gives you insights. You have to have activity before you have insights. And there's a timeline needed to even establish baseline that I think a lot of businesses haven't maybe really understood. A lot of conversations with the businesses we talk with, it's almost like this assumption that we're going to start marketing, put dollars into marketing, and some kind of lead faucet turns on. But those of us in marketing know that's not the case. So I think I just wanted to validate that there are some valid metrics around production too, that get you to establish baselines.
Yeah, I mean, I just call it, in the finance world, we call it start creating game film. You have to have game film, right? Mm-hmm. And so you have to have a lot of game film. And so you're going to have a lot of bad game film to review, and you're going to have some great game film to review. But if you don't have any game film, it's hard to up level, right? It's hard to make the next change. And so like the mantra is create the game film. And
I like that.
Yeah.
I like that. Well, moving along back to you, JP. Obviously, AVL and Authentic Brand are both in the business of executive advisory with growth businesses on a fractional basis. that means we're brought into growing organizations at a time when they often recognize they need some help they need some leadership they don't currently have in-house. So from your perspective, when is the right time for a business to bring in that kind of outside help, and how can that kind of guidance cultivate alignment in these two roles? And specifically from your side, they're bringing you in on the finance side. How does that help growth businesses align?
I guess the easy answer is it's never too early to do the right thing, right? In my portfolio of clients, I have companies anywhere from pre-revenue all the way to IPO ready, right? So the entire gamut. And they need different things from our engagement at different stages. But if we focus on the earlier stage companies, it's probably easier. And what I see people coming in us to is like, we want to set this business up with best practices, with this gold standard, right? So it is really what they want. They know they're going to be successful. They have the right people, the right idea, the right capital, and they just want to make sure that they are setting things right from the start. So I would say in that sense, there's never a too early situation here, because it's sometimes harder to, if we are brought in maybe at a later stage where things have been done maybe not the best way for a while, then you have to do a lot of cleanup and undoing, and it's not necessarily productive work. So I think bringing in the right people around the table at an earlier stage allows those decisions to be made with the right metrics, with the right perspective, professional perspective. I mean, that's what you're doing when you bring people like AVL and Authentic Brands, is you are people with tremendous amount of experience in your organization at a stage that you could not afford on your own, just looking at your size. And I can even reinforce that by saying the people, I work with a number of companies and I solve a lot of different problems that I bring and to the table with every one of my clients. So I leverage all of that. But more than that, inside of our organization, I have peers. So together we have hundreds of companies and hundreds of years of experience that I can leverage and really helping bring to my clients situation here. So it is a lot more rich from a professional contribution than just saying, okay, I'm going to wait until I'm ready, I have the money to hire the next key person. And what is that next key person? We just talked about, is it a CFO? Is it a CMO? Is it a CRO? Is it a COO? Which one is the next key hire, right? So I think, I'm a big believer in the fractional business model and having the ability to bring the people in whatever scope is necessary at the time to solve and make the best decision possible. Because I mean, we all know that small businesses can't afford too many mistakes, right? And that's why we have to be nimble. Chris was just talking about the experiments, right? You need to experiment things and fail fast, fail cheap. We need to iterate very fast into that, and the world is changing. So having professionals that are allowed this dynamic kind of ecosystem inside the company is really rich from that standpoint.
Yeah, and one of the things I really appreciate about our relationship with AVL is that your model is so similar to ours at Authentic. We also have that peer cohort collaboration, which we call our mind share. So Peter, what have you seen in terms of the right time to bring marketing leadership into a growing business, and how that helps to create the alignment between marketing and finance?
I think it's precisely when you are wondering, how are you going to grow sales? And the tools you're using now have stopped working or have hit a limit. And that generally happens when you're describing, a founder is doing a whole lot and the founder tends to do the marketing. But for the reasons we were talking about before, marketing is so technical now. And to get the leverage out of marketing, you have to invest early and build over time. Eventually, the sort of the reactive toolkit is going to run out of gas. And then you need to bring somebody in who can say, okay, what part of the search landscape do we need to own? And what is our performance there now? What's our strategy to go after content in this landscape and start building rankings on it? One of the things that comes as a surprise to a lot of founders and some CFOs is that better organic search performance gives you lower paid search rates. Google rewards good search performance for like your organic content, the content that you're just producing and people are finding. The better you are at that, the lower you pay for ads. So this is a 6 to 18 month planning horizon that needs to be put in place and staffed and instrumented. So I would say you can't really do it too early. Actually, I just started an engagement with a client with Authentic Brand, who is a company of 2.5 people, and that's one full-time person and a bunch of half people. And there is no marketing going on, but they've got a really big, ambitious business they're going to go build, and they understand we have to start early if we're going to have the commanding role in the marketplace we want to have. So yeah, I would say sooner rather than later, and then give it time because it takes time to get the results.
Absolutely. As the other marketer in the room, I'm going to double down on that and say, I had the advantage when I founded Authentic Brand of knowing the ramp up that it takes to create validity in the search world with content. And so my first commitment, even as a founder without a marketing team, was create great content and keep creating great content, because it's going to take 2 or 3 years before we're organically showing up with that content. And I'll tell you what, exactly 2.5 years into that rigor, we started to see inbound being 1/3 of our lead generation, all based on content. So it takes time and it's an effort, but I just wanted to double stamp on that, Peter, because we feel it and we're living it here.
Well, I'll go out and say, Jennifer, that I'd say marketing precedes finance all day long. And I think you can muddle your accounting way for a while, because I think the most important thing is does your product really work? Does it sell? And do you know the market? Do you know your customer? Like, you got to get that. That's your 1 or 0. That's a binary kind of thing. You start getting that working, you can get your bills paid. You can run payroll on the cheap. Now, when you kind of are moving out there and you're kind of getting to that second or third, step in the staircase, you got to say, all right, you can't be putting all your finance things in one bucket and not know anything about channels or types of customers or types of products. Then you start to say, okay, we need to get a little bit more sophisticated, and then finance has to recalibrate and catch up to where the business needs to go. But I'd say, man, the marketing's got to be hit early. And so a lot of times we'll say, use the analogy like AVL is an F-250 pickup. Like we want to haul stuff. We want to be able to carry up the mountain a large load. And it's like sometimes these businesses aren't quite there yet in terms of their finance and accounting, and say, hey, you're doing great. Things are you're on an okay path. You're not going to break anything. But as soon as you start asking these types of questions, then it's time for us to start jumping on board. But I think you're not going to even ask those types of questions until you have marketing starting to ask those questions, right? Or need that information from the finance team.
Absolutely. Absolutely. Any other comments before I bounce us to the next and final question? And I want to make sure I leave time. We've got one audience question. I just want to say, I see you. We will address that question, but I want to invite our audience to add any other questions. If we've got time, we'd like to make sure that we're addressing what's on your mind. But over to our friends on the finance side, Chris and JP, if you had a magic wand and you could change just one thing about marketing's view, or the dynamics between marketing and finance, if you could change one thing about marketing, what would it be?
That's a very dangerous question, and I'm on the spot here. It's actually maybe my marriage is on the line here. But I would say maybe I've said it. Peter talked about all the beautiful quantitative work that's being done in the marketing world. but it's unfortunately not the same everywhere. And sometimes the first marketing hire is maybe a content creator or more of a creative type, and maybe the quantitative skills are not there. So I'll put it simply and say, maybe marketers need to learn a little bit of Excel, and I'm not going to learn Photoshop, I promise. So I'll stay out of your way. But I think maybe going back to some things I said earlier, which would be, as long as we align on that North Star or those goals, I think marketing and finance are really attached at the hip. I mean, I always see myself as a service organization. Finance doesn't want to be the tail that wags the dog. We are there maintaining the engine room, but we're not the one filling it, putting the gas in. So marketing is. That's the way I define our role, and we really want to to work hand in hand. So for me, as long as we build that common language, I think we move together, organization, and achieve those great goals. That's kind of my quick quip about
That's your one magic
marketing.
wand. Perfect.
Yeah.
Chris, what about you?
Yeah, I was thinking more of the psychology of, accounting. Basically, we have GAAP. We have a big giant book that tells us there's one way to do things. And so, what we would want is like, there's only one way to do marketing, in the sense of like, marketing is just so broad and such a wide way to attack. And so it's like, that is a pain in the ass for us. I mean, we just like, can you just do it one way and just have that be the right way? And I think that would be like the silver bullet for our brains in a lot of ways. I mean, it takes away the amazing creativity that happens in marketing. But I would say that, and actually there's a lot that's I could say I'd glean from what Peter was talking about today, which is like, there is and I think I'm speaking a little personally, a little bit about AVL too. Like we have this great opportunity where a lot of clients are coming to us. We've created something, we do good work, but in some ways where we want to go as a company, if we don't plant the seeds now for something that's going to grow from a marketing perspective and build skill and expertise, that even though we don't necessarily use all the tools of marketing in our earlier years, that it will stunt our opportunities in the later years. Because I think that's when you start to say, we really have to have strong, a larger reach, a bigger presence than we were, an outsized presence relative to who we are to achieve the long-term stuff. So I think that kind of that belief in the foundation setting, I think, is probably the hardest thing for CFOs probably to fully grasp. And I think that would be the one like piece I would say is like, how do we believe in that foundation for the long haul is crystal clear to the CFO world.
Oh, that's beautiful. I feel like that's a whole nother webinar in the making. But Peter, I want to make sure I have time to ask you the dangerous question too. If you could wave that magic wand and change one thing about finance, what would it be?
I think it would be to look at marketing in the same way you look at your technology department and product development department, instead of looking at it like it's like sales. Because if you're a CTO, you're making multi-million-dollar investments that don't pay off in the year you make them. And you have to be looking 2 and 3 years out about the kind of business benefit you're going to get from the products you start building now. And in both my last 2 roles, I borrowed the Agile coach from the CTO because the whole marketing department ran on Agile. And the same thing about 6-sprint plans, 3-month, 6-month, 9-month, 12-month release horizons for all of our campaigns. And I think if CFOs looked at marketing like more like the animal that technology product development is, I think that would go a long way towards getting us all on the same page.
I like that.
Peter, I love that too. And I'm going to ask you to share that analogy with our entire CMO team, because I think it'll help reframe a lot of expectation conversations with our clients on what it is that we're doing. I've often tried to help clients understand that, you know, when you've got a growth goal, and many of our clients use an operating system like the entrepreneurial operating system, EOS, to plan their business vision. So they've already articulated their 1 year, their 3 year, their 10-year kind of vision for growth. I am often encouraging them to think about investing in marketing as if they were 2 years ahead already in their revenues, and think about the marketing investment that way. Because if you're driving growth, we know that the outcomes, the fruit of that is coming downstream. So, oh boy, we could kick off a whole nother webinar right from where we just landed, but I want to make sure that we stay on time. And I promised my one brave audience member that we would address this question. So I want to tee it up. Peter, it's addressed to you. Peter, in your opinion, how has SEO and its effectiveness changed, particularly as it relates to the upfront investment before ROI becomes measurable?
Yeah, this is the key question. I'll answer it 2 ways. One of the very few things that Google does good in the world is interpret page intent. And they made this change about 8 years ago. And Google will now evaluate the quality of that page, because it will understand, is that page an awareness oriented page? Is that educating somebody about a problem? Is that page a consideration piece of content? Is that educating that visitor about what are potential solutions to that problem? And then if that page is a conversion page, they're going to look at it and measure the effectiveness of taking somebody who knows they want to buy and then having them submit a form or commit or convert. And they can look at the paths everyone takes. So if you don't sincerely address the concerns of the visitor with appropriate content at the appropriate stage, you will suffer, and they will penalize, they'll rank you down. So it all begins with the easy part is Google's made it really easy for you to create content that performs well, and they will tell you if it's doing that. The hard part about the ROI is it's going to, whatever business you're starting, you're going into some segment where somebody's already been there, and you're trying to carve out a new category there. So you're going to go into a search landscape where somebody else is already ranking in the top 10. And because it takes time to improve that, you have to look at your ROI as human capital spread over time. And you can move your rankings in a month, but you're going to move them from ranking on the 8th page to maybe the 7th page. But unless you start that journey now, you'll never get to the first page. So I would say the good news is SEO has never been a more important tool. It's effective. It takes a long time to get the results you ultimately want, but you can measure the return on your investment every month. And your investment's going to be somebody writing content, and ideally you have a search engineer with you who is doing providing all the guidance and measuring the effectiveness of your search performance of that content. Those two heads, and you could make those fractional people, you could get those from an agency, but those two heads are your investment, and you can measure your return on how much of your content is moving up the rankings every month.
Awesome. Thank you, Peter. Well, gentlemen, does anybody have a final thought you'd like to share before we move to wrap today's event? I sprung this on you. Go ahead, Chris.
Well, I think it's just reflecting a little bit on, the CTO and the systems piece, and we've spanned all the way to sophisticated systems from this founder 2.5 people, and there's a number of interesting stages in there. And I think there's probably a number of answers here that may resonate with certain listeners differently than other listeners, depending on that stage. But I think they all come back to the same thing, which was what we've always said, is just plant the seed early and I think it's in that ROI piece is like, how do you get the CFOs to kind of say, there's an inherent belief, there's trust between the CFO and the CMO of saying we're planting this seed, and we're being diligent about it, and we're going to put stuff in place, but we know there's some long-term kind of directional, I guess I would call it that religion. We're believing in this in some ways, but we're also going to measure, but it's not all just going to sit out there and reproduce the next 30 days, right? And so and I think that's the common thing that spans all of these conversations across stage.
Absolutely. Well, we are going to put a bow on this wonderful conversation, though it has gotten me thinking about a few other spiral off topics we might want to address in a future Authentic Growth webinar. But before all of our attendees take off to their next meetings, I want to ask for some feedback on today's event. And we've got a quick little live poll that we would love for you to share some real-time feedback with us. Once you've done that, I just want to say thank you so much for joining us here today. And I want to invite you to reach out to Authentic Brand if you've got questions about marketing and defining your market fit and focus and growth plan, and also AVL Growth Partners on the finance side, all the way through the full stack of finance capabilities. They are working with companies at all stages of growth. We've seen their work with some of our clients, and definitely trust them as a partner in our ecosystem. So Chris and JP, thank you so much for joining us as our guest today. And Peter, as always, thank you for representing our CMO team. And attendees, thank you so much for your time and attention. And we hope that you've taken at least one or two valuable nuggets with you today. So until next time, go forth, be a blessing, be blessed, shine your light. We'll see you again. Take care.